very strong downtrend. We're breaking above the 18-day predicted moving average. We can see that we've closed at 135.90. 135.74 represents a very good buying opportunity in my opinion. This thing has been grossly oversold for months. Every day, for example, it was hitting an all-time low. Now, there is, in my opinion, opportunity buying at this level. I believe that the euro is in the process of recovering. Again, some of the fundamentals that are happening with the banking system are really of not that big of a concern to me, to be perfectly honest. Global reserves in the euro are very high. I've stated this repeatedly over the last several weeks when a number of other market analysts are saying the euro is going to par with the US dollar and the euro is going to cease to exist and all this nonsense. The reality is the global banks have huge reserves in euro. The euro is not going anywhere. So to uncomplicate this as much as possible, what we really want to be doing is looking for opportunities on different cross pairs and on different major pairs to actually start buying euros at these bottom basement bargain prices, in my opinion, on the euro. And euro Swiss franc is definitely a good area to look at that. Now we can see that we have plenty of room to extend. We're still in negative territory in the predicted true strength indicator, but the reality is it has a considerable amount of room to extend. Predicted medium and long-term differences are sitting at about 80 and 90, which is trend-ready levels. Very good there. So what I would recommend with euro Swiss franc right now is buying on dips. Now we're also going to talk about ranges here today too. I'm going to bring this up on some of the currency pairs because it's certainly worthy of a look. Now again, keeping things simple, we've got this crossover from Vantage Point. It's trying to make that. Let's have a look at the long-term crossover from Vantage Point. That's the last indicator before the triple EMA confirms. So we've got the long-term crossover that's taken place. It's sitting right about this 133.80 area is where the crossover has taken place. So everything looks good there for this thing to extend higher. So again, to uncomplicate this, we want to buy. In Forex, we're either buying on dips or selling into strength. In this particular case, in my opinion, we want to buy on dips. Now let's move into our next pair, the Euro US. So with the Euro US currency pair, you'll remember that I had talked about buying off this 122 level. Again, I wasn't a very popular guy there for a couple of days when I was making that call, but the reality is with the US dollar index, the equities, the crude oil, all the things that I put together to do my analysis told me that the euro was going to go higher, even though a number of other market professionals completely disagreed with what I had stated. But the reality is it's not about being right or wrong. It's about getting the information in front of you to make an accurate call as to what's going to happen in the market using the intermarket technical analysis, because single market analysis did point to further euro weakness, but intermarket technical analysis suggested otherwise. So looking at this little indication here, if we take our profit calculator and move it up here, I always like to play around with this indicator. We've hit just below this 130 level. That was basically our trade for the last couple of weeks. If we haven't taken anything else, we produce, again, I'm sorry, that's my fault. I'm just going to put that back up there. We can bring this up into this 130 level where the market's actually hit to. And then when we run this profit calculator, it shows how many actual pips we produce on that trade. So we've got 805 pips over the last week and a half on the Euro US trade, buying off this 122 level. Very interesting trade. It's a one-directional trade. So but I realized that there were so many people felt that the euro was going to go so much lower, and nothing in front of me showed me that the euro was going to go any weaker than what it did, and that we were getting a turning point. And again, a lot of that was based around the US dollar index. It was based around the S&P 500, the Dow Jones Industrial, all these different other crude oil, all these other indicators. And that's what intermarket technical analysis is, looking at all these other markets, not just with the Vantage Point software, but in real time as trading starts. But the benefit of the Vantage Point is it forecasts out. It doesn't tell us what already happened. I know what happened. I don't need to be told. I need to know what's going to happen. And based on that, this is what we were able to assess. So it's an interesting trade. Now we're getting a little bit overbought in the 40 level on the predicted true strength indicator, but no sign of a cross there to the downside. Predicted MACD also moving higher. Predicted medium and long-term differences. The long-term difference is overbought, so we can expect a pullback here. Now, if we're expecting a pullback, what area would can we assess that it potentially could pull back to? Well, what we want to do now is look at the three predicted moving averages from Vantage Point and use them as pivot points. Our first pivot point is the 3-day, 128.67. Our next pivot point, 127.40, which is the 8-day predicted moving average. Our third pivot point, and our most important one, sits just at about the 126 level. So if Euro US closed at 129.28, the market started aggressively selling off and moving lower. All the short-term indicators started saying Euro US is going down. Then the market analysts come on, Euro's it's going down. It's, the Euro's just the higher move higher was corrective. We use that as an area to get a better position on our longs. That's how you play this. So essentially, if the Euro US started moving lower and lower and lower, it just represents a better buying opportunity for us. And that area is identified all the way down to 125.95. Is the market going to go down to 126? In reality, I really don't think so, unless the equities come under a lot of pressure. So we're still in a substantial uptrend. So to begin the week on Euro US, I would be looking at longs between 128.67 and 127.40. That's where I would focus my attention to begin the week. Now, what we're going to do now is go into our daily report, and again, look at that daily report and try and assess, between the daily report, the 3-day and the 8-day predicted moving average, where can we get in on this? 128.66, 130.07, that's our range. So when we start moving back towards the 128.66 area, that's our first long entry point. Now if it starts breaking lower, we can add another long position, doing a little bit of dollar cost averaging and breaking our positions apart. But again, we want to spread our long positions out over that 300 pip range and then wait for the market to simply go back, whether this is corrective in nature or not, and then reset our longs, and then away we go. And that's what we've been doing actually for months on other pairs like Great Britain, US, a number of other currency pairs. But that's, in my opinion, how to play the Euro US. Now I'm spending far more time on Euro US because it's it is the most heavily traded currency pair in the foreign exchange market. So it's certainly worthy of spending a considerable amount of time with it to understand really what's happening here and how to play this, and not get caught up on the short-term intraday nonsense, people buying, selling. They're trading both sides of it, where we're just trading, again, we're either buying on dips or selling into strength. That's how we play this. Now, I think that's a very good, very detailed outlook on Euro US, and it also points out what we've been doing for the last couple of weeks here also, showing that 805 pip move. Very, very nice trade. And actually, to point out to everybody, in the live pre-market open, which is set for July 21st at 9:15 a.m., you can actually see live trades that were put in a week and a half ago back down at this area, actually a little higher than this area. Longs that were put in at that 125.90 area in real time on the last